TQQQ is down 5.28%. VOO is down 0.4%. 1 week in and the amplified portfolio is already losing 13 times more than the boring one. And I have not sold a single share. Before we continue, nothing in this channel is financial advice. This is an experiment. It's entertainment. Always do your own research before investing anything. Okay, let me show you exactly where we stand. I've been buying every trading day since July 1st, although I want to be honest about 2 things I discovered this week. First, July 3rd, the US stock market was closed. It was the day before the 4th of July, and that's a national holiday. That meant 1 fewer trading day than I expected in the first week. No big deal, but I just want to be transparent about it. Second, Robinhood Europe does not invest exactly €5 per order. It rounds down slightly. Each purchase ends up closer to €4.93. And that is just how fractional share buying works on this platform. Again, that's not a problem, but you should note what you're actually looking at when you see the numbers on the next screens. So here are the real numbers, both accounts as of this morning. On portfolio A, VOO, €19.59. That's minus 0.40%. That's minus 8 euro cents. And on portfolio B, the TQQQ one, we have a value of €18.63. That's minus 5.28%, which is minus €1.04. Both portfolios are in the red, but the gap between them is already significant. VOO is down less than 0.5%. TQQQ is down more than 5%. The boring one is outperforming the amplified one by 4.88% in a week. Now, before you think this proves TQQQ is a bad idea, let me show you the market context, because the why matters just as much as the what. This week, the Fear and Greed Index sits at 43, still fear territory. But here's what is interesting. Last week, it was at 31. That's a 12-point jump in 7 days. Investors are getting slightly less nervous, not confident yet, but moving in the right direction. A score of 43 is right on the edge of fear and neutral. That tension between fear and optimism is exactly what made this week so volatile. Strong days, then sudden sell-offs, the market could really not make up its mind. And TQQQ, as usual, felt every point of that decision much harder than VOO. So what happened at the market? The first event. The AI chip stocks led a strong rally. Early in the week, technology and semiconductor stocks had a strong rally. Investors became more optimistic about AI spending after strong signals from major companies. Like Broadcom, that was one of the biggest movers. And since TQQQ tracks the Nasdaq with 3 times leverage, it benefited significantly more than VOO on those days. If the week had ended there, TQQQ would have been the clear winner. The second main event, a softer jobs report, reduced rate hike fears. On July 3rd, a weaker than expected US jobs report came out. That made investors believe that the Federal Reserve is less likely to raise interest rates for this month. Lower rate expectations are good news for growth stocks, because future profits become more valuable when borrowing costs stay low. Both VOO and TQQQ got a lift from this. But again, TQQQ got a bigger lift because it amplifies everything. The third event, DeepSeek AI chip news, triggered the sell-off. Later in the week, reports emerged that China's DeepSeek is developing its own AI chip. That raised serious questions about whether NVIDIA's dominance in AI hardware could face real competition in the future. Semiconductor stocks sold off hard, and since NVIDIA is one of the largest single positions in the Nasdaq, TQQQ felt that sell-off far harder than VOO. So the week in one sentence, a strong AI rally, followed by rate relief, followed by a sharp sell-off on competition fears. That is why TQQQ ended down 5%, while VOO barely moved. 3 times the gain on the good news, 3 times the pain on the bad news. That's the experiment live for you to follow. But I want to take a step back from the numbers for a moment, because after last week's video, I thought I should answer a very basic but very important question. I kept saying VOO is the boring ETF, but what actually is an ETF? It's a fair question, and the question explains why VOO exists in this experiment. ETF stands for Exchange Traded Fund. The simple version, it is a basket of stocks that you can buy as one single product. Instead of buying Apple, then Microsoft, then Nvidia, then Amazon, one by one, you buy one ETF and get a tiny piece of all them at once. Imagine you want to try every good restaurant in your city. You could visit each one separately. That takes time, money, and a lot of decisions. And you might pick wrong. Some restaurants might close, others might get much better. Or you could buy a membership to a food hall that gives you access to all of them at once. The food hall adjusts over time, bad restaurants leave, great new ones join. You do not have to decide anything, you just have to show up. And an ETF is a food hall. The individual stocks are the restaurants, and the index that the ETF tracks decides which restaurants are in the hall. Now, there is one more thing that makes ETFs particularly attractive, and that's the cost. Because no one is actively picking the stocks inside a basic index ETF, the management costs are very low. VOO, for example, charges 0.03% per year. That is €3 on every 10,000 euros invested. Compared to an actively managed fund, which might charge 1 to 2% per year, that's a dramatic difference over decades. So what index does VOO track? It tracks the S&P 500. S&P 500 is a list of the 500 largest publicly traded companies in the United States. Who decides what's on that list? A committee at S&P Global. But the rules are objective. If a company becomes big enough, it gets added. If it shrinks below the threshold, it falls off. Right now, the top 5 companies in the S&P 500 are Apple, Microsoft, Nvidia, Amazon, and Meta. Those 5 alone make up roughly 25% of the entire index. So when you buy VOO, you are not equally buying 500 companies. You are buying a lot of Apple and Microsoft and Nvidia, a meaningful amount of others, and smaller pieces of 495 others. The index changes over time. 20 years ago, companies like Kodak and Sears were in the S&P 500. Now they are not even publicly traded anymore. And 20 years from now, some of today's top 5 might not even exist in their current form. And new companies we cannot predict will have taken their place. The index updates itself. You do not have to. So why specifically VOO for this experiment? 3 reasons. First, it tracks the S&P 500, the benchmark. When financial news says the market went up, they almost always mean the S&P 500 went up. VOO is that market. Second, it is one of the cheapest ETFs in the world, 0.03% per year. Over 30 years, that cost advantage compounds into a significant amount of money. And third, it is available on Robinhood Europe as a token, which is the broker I'm using for this experiment. VOO will probably never make you rich overnight. It will not triple when the Nasdaq has a great week, but it also will not lose 5% because one Chinese tech company made an announcement, like this week with DeepSeek. That is the point of the boring one in this experiment. It is a control group, the thing I measure TQQQ against, steady, proven, and with not too much surprises. Which is why it is so interesting that after just 1 week, it is already winning. Next week, I will explain what TQQQ actually is under the hood. And I promise you, it is not what most people think. So let me leave you with the current state of the experiment. Portfolio A, VOO, €19.59. minus 0.40%. Portfolio B, TQQQ, 18.63 euros, minus 5.28%. The current leader is VOO, which leads by 4.88%. 1 week in, the boring one is winning. Will that change? Absolutely. The whole point is that we do not know. Please subscribe so you do not miss next week's update. And if you want to follow along with the same broker I'm using, there is a referral link in the description. Full disclosure, it's a referral link. You get a benefit and so do I. And again, for this week, may the best ETF win. VOO trades the 500 largest US companies. But is the US really the right bet for the next 30 years? Or would you choose a different part of the world? Drop your answer in the comments. Have a nice day, and I hope to see you next week. Bye.